Alright guys, time for portfolio update. You probably know that the very first trading day of each month we buy a stock and next month we give you update about our purchase. Just not only that, we also give you update how our portfolio has performed. Guys, you have seen many videos on YouTube, undervalued stock, multi-bagger stock, top stock to invest. Let's admit it, we actually like those videos. You will never know whether the YouTuber that is talking about the stock has really invested on those stocks, and it just remains a video. But we try to do things differently. We talk about the stock that we have purchased and we show you real portfolio. If you're tired of all those videos and want to see something real, you can subscribe to our channel, because here we show you our real portfolio and also show you how our portfolio is performing in any time. No nonsense talk, let us start. Guys, before we start, let us clarify it. The portfolio performance that we are going to give you, the portfolio right now, how exactly the valuation is and how does it par with the benchmark. Without keeping any suspense, let us reveal the name that we have bought. We have bought Kotak Mahindra Bank on 3rd Jan 2022. We bought 12 units at an average price of 1805 rupees. This is our second purchase on Kotak Mahindra Bank. The first purchase that we have made on Kotak Mahindra Bank, it was on 1st June 2021. So almost 6-7 months later, we are buying the same bank at the same price level that we have purchased earlier. Simply put, we have added Kotak Mahindra Bank to our existing position. Now you get to see our portfolio. By the way, this portfolio remains online accessible all the time. The link is provided in the description box. Guys, now let us focus on the portfolio. As of now, you can see the total investment made on this portfolio is 4,08,000. And at this time, the current valuation of our portfolio is 4,28,000 rupees. The gain is around 4.8%. Now, if we just talk about the investment and the valuation, it really doesn't make sense, right? So we have benchmarked our performance with the Nifty 50. What does it mean? That means instead of buying all the stock on that particular day, if we would have made all the investment in Nifty 50, how exactly our portfolio has performed? That is benchmark return. You see the benchmark return over here. The change in the benchmark is 12.9%. When our portfolio has changed 4.8%. That means Nifty has changed almost 13% when our portfolio has changed just 5%. That gap is alpha. You can see currently the alpha that we are having in this portfolio is minus 8.1. Guys, when we uploaded our portfolio update on January 2022, this alpha was close to 1. Now within a month interval, the alpha of this portfolio has fallen from minus 1 to minus 8.1. This is a really big change. So let us see the reason behind so much of drastic change in alpha. Guys, we hear so much of news about the stock market, about the market correction, especially in this year, right? If we see the data, the change in Nifty 50 since the 3rd Jan till today, it is flat. That means there is no change in Nifty 50. So when we recorded our last video, till today, there is no change in the benchmark. But if we see how exactly our portfolio stock has performed, we can see that the major fall that we have seen, that has happened in all high PE stocks. And our portfolio owns many of those stocks that has gone through severe correction. So if you see the intensity of the correction that you have seen in some of the stock that we can put here, when the Nifty 50 stock remained flat in this year till date, we can see Dr. Lal Path has fallen 20%. PI Industries has also fallen around 16%. About India has fallen 7%. Divis Lab has fallen 8%. As you can understand, when Nifty 50 remained flat, all the stocks that we are owning, which is mostly high PE stocks, it has corrected a lot. Because of that, our portfolio dropped. So what do? Shall we get scared and sell all the stocks? Absolutely no. This is a wonderful time to accumulate a lot of high quality stocks, especially if the business are going fine. Before jumping into the business quality, first let us check how exactly the volatility of our portfolio. Now, if you see the chart here, the blue line indicates the amount of money that being invested, and in green color, you get to see the benchmark, how exactly it's moving. And then in gray color, you see our portfolio performance. If you observe carefully, you will see that until last month, our portfolio was going as par with the benchmark. But after that, the stock in our portfolio has corrected and that has deviated from the benchmark. If we see the overall volatility of this portfolio, it is still less than 1. When we recorded our last video, our portfolio volatility, which is measured by beta, it was 0.7. Now it has increased little bit because of the movement you have seen in our portfolio. Let's come to the most important part. What gives us this confidence to hold these stocks, not getting scared and sell it in this flash sale? Out of all 10 businesses that we own, 2 businesses are from financial and 8 businesses are not financial. So first, what you get to see is the company that are not in financial space. We see the sales growth in last 5 years. All the companies are growing in double digit. If we see the earning growth in last 5 years, except Asian Paint and Pidilite, all the other businesses has grown their earning by double digit. Now guys, just earning growth is not good. We have to see if the earning is growing at the cost of return on equity. Guys, if we see the last 5 years return on equity, all the companies are making return more than cost of capital, which is really good. All the profit growth all these companies are making, they're reinvesting back in their business and growing at a really good pace. This is nothing but compounding machine. Time is a very good friend of all those companies. So what do? Simple, we give time for all this company to compound. Now coming to the 2 financial business that we own, one is HDFC Bank and another one is Kotak Mahindra Bank. For bank, the most important thing that we need to look at, what is the return on asset these banks are making. Now if we see HDFC Bank and Kotak Mahindra Bank, both are making ROA more than 1.5%, which is really good. And if we see the risk management, we can check it through net NPA and capital adequacy ratio. If we check the net NPA for HDFC Bank, we see 0.4, and for Kotak Mahindra Bank, it is 1.06. These are very low number, and that means the banks are managing their risk very well. Another very important thing for bank, which is capital adequacy ratio, we see for HDFC Bank and Kotak Mahindra Bank, their capital adequacy ratio is really good. So that means the banks are really at a solid footing and they're increasing their earning by at least 18 to 20%. So you can understand these are the business which need time. We are being patient. We are going to hold the stocks unless and until there is something really bad happens with this company. After the investment that we have made in this month, the allocation has changed a little bit. So as of now, the Divi slab is having highest allocation. You see it is 16.3%. And then Kotak Mahindra Bank, it is 14.2%, and then Asian Paint, which is 12%. Guys, the allocation keeps changing when we infuse more money into the portfolio, and we give you update every single month. Guys, this is live wealth creation. This is about the stock portfolio. We have also shared our mutual fund portfolio. You can click the I button and check our mutual fund portfolio. Guys, we have a Telegram channel where there are more than 2,000 members are there. If you are a retail investor and want to be a part of our community, feel free to join in our Telegram channel. The link is in the description box. That's all for today. We'll catch you up soon with our next video. Until then, take care. Bye.